What up, everyone? Welcome back to another episode of Wake Up with Wops. Today's video is going to have no camera just because I have some bad internet connection at the moment. It was too laggy and it was making my trading view slow down. So for this video, you're not going to see my face. So looking at the SPY and QQQ, before we get into the title of this video, which is we entered into some new trades, we're going to talk about the overall market, starting with the SPY. Look at this past 4 days. Pretty much extended right now, so I wouldn't be surprised if we have like a shakeout that comes back down to these averages and then people get fearful again a little bit, but we kind of need that because it's looking a little bit too extended right now. And if we continue going higher, then this is going to be a nasty bear trap when we look at hindsight, when we look in the future, that little V-shaped bear trap right there. But I'm not going to get too bullish yet because we still need to break this lower high that was made in November. It was November 12th. You can see once we break that high, then we invalidate that lower high from this high, and then we will continue going to all-time highs. Same thing with the QQQ. The Qs have been very oversold. Big tech has been selling off. So it went a little bit deeper. You can see here kind of pierced this trend line I had here, but they're now above the key moving averages, just like the SPY. So we're looking bullish right now. We would want to break this level right here that happened on the 12th. I'm liking it. That's why I entered into 2 new trades. Let's go over it now. Amazon is my first trade. You can see here that I pulled back in a deep sell-off to the 200-day moving average where we highlighted it in the stochastics that it was oversold right here. And then you can see it recovered 3 strong days, and then today above the 50-day average and the 9 EMA. We entered around 230. We're up a point right now, but it's looking good. Looking pretty good to get to the all-time highs. A 2-to-1 risk to reward, but depending on the trader, if you want to have a tighter stop loss, you can make this into a 3-to-1 or even a 4-to-1 if you're really risky. Or if you want to be conservative, you could just make this a 1-to-1 risk to reward. I don't think we reach that 200-day average, but if we do, we would want that level to hold. If it breaks that, then you should be getting out of this trade. But I'm liking it. We got stopped out twice on this trade before, but that's not going to stop us from entering a 3rd time. Next trade is JPM, which is JP Morgan. We entered the trade here, if you guys don't remember on the channel, kind of the same concept. It dipped down below the 50-day average, remounted the 9 EMA, that blue moving average you see there, and then we took profits at the top. Sid did the same thing, pulled back, and now we're at that 50-day average with the 9 EMA curling up right under the candle. So we're liking that for continuation back to the top of the range. Quick trade, I think that's going to be good, and we're kind of diversified. So in the last video, go check it out. I doubled down on Meta and PAHC. Meta's our tech play, and this is our health technology play. I believe they're like Vets or Animal Health Corporation. It's not really important what they do, just like the technical analysis on this chart. Then we have our retail and tech plays. I would say Amazon's kind of retail and techie, and kind of the same with Netflix. Everybody has a Netflix, and it's pretty much a retail tech play in my opinion. And then I have a bank finance stock. So I'm pretty diversified in my positions. I'm not looking to add any more. That is it for now. Tomorrow is Thanksgiving, so happy Thanksgiving to everyone. Peace.